There is one trading strategy that I use every single day. It's stupid simple, repeatable, systematic, and the most important part is the main reason why I'm making consistent profits in the market. So in today's video, I'm gonna explain the whole strategy in just 3 simple steps, and then after I explain everything, we are gonna put it on test and see the real results. So without wasting any time, let's jump straight into it. So these over here are results from the last month alone, November 2025, and I made around $35,000. Of course, there were some trades that I didn't take any trades because there was no opportunities, but I waited for the A+ setup to present, and then I continue with my winning streak. And of course, sometimes you are gonna lose, but this strategy has insane win rate. So the real question right now is how you can replicate these same results. So goal of today's video is gonna be for you to make consistent profits using simple and systematical strategy within first 90 minutes of market open. Sometimes it's gonna be even less, let's say first 30 or 60 minutes of the market open, and you're gonna learn one trading strategy that is repeatable and mechanical, because there's many traders who are trading without any rules, and that is very hard because you don't even know what to look for. So we are gonna have clear set of rules. And last thing, you can forget about daily buzz, any fancy indicators whatsoever, and dozens of concepts that don't work that you saw on YouTube. Which means next time when you see a trade opportunity, there won't be any guesswork, any hesitation, or any missed trades. So let's make a quick breakdown of the whole strategy. So we are gonna have 3 simple steps, but it's gonna be crucial for you to understand that this strategy is gonna operate based on the liquidity levels, which means we are gonna target or react off of them. Second thing is gonna be fair value gaps. We are gonna use them for direction, but 99% of traders are pretty much using fair value gaps wrong, and I'm gonna teach you the right way how to use them. Also, we are gonna use different time frames and entry types, so you can enter your trade on the 1 minute, even seconds, 2 or 5 minutes, or even all the way up to the 15 minutes. And we are gonna learn how to manage our trades, where to put stop loss, where to put take profit, when to go break even, where to go break even, and then we are gonna do some live examples. So like I said, this strategy is gonna be mainly focused on liquidity, and instead of focusing on internal price action and getting stuck into the range, so let's say this is our previous daily high and this is our previous daily low, many traders are gonna get stuck into this range. They are gonna look at charts 24/7 and still they are gonna lose trades because they simply don't know where to look for. So we are gonna focus only on the last highs and lows, which are meaningful liquidity levels. So we don't care about these highs or these lows or these highs or these lows. We simply don't care. We just mark previous daily highs or session highs and lows, like in this example, and then we are waiting for one side to be swept, and then we are gonna look for trade. Simple as that. Also, this strategy is gonna work the best after 9:30 a.m. Eastern time, and the reason why I'm saying that is because the most volatile moves in the market are gonna present after 9:30 a.m. because that's just when the New York Stock Exchange opens, and usually you're gonna see these manipulations sweeping those highs and lows, and then we are gonna take our trades. And also the good thing about this is that we don't need to 9 to 5 charts, we don't need to stare 24/7 at charts and be stuck. We're just gonna look at the markets after 9:30, and that's literally it. And right now the main problem for most traders is that they're gonna feel FOMO, they're gonna see this as a break of structure, they're gonna think that we are extremely bullish, and you're gonna see that we have this bullish fair value gap created, and they are gonna place a trade like this, and what's gonna happen? They're gonna lose immediately. And that's why I told you that I'm gonna teach you different approach to the fair value gaps. So instead of taking longs after the fair value gap retest, we are gonna take shorts after this aspect of the fair value gap, and we are gonna target the opposite liquidity, because all those traders who are taking longs from this fair value gap, they don't know that liquidity is already taken on the buy side, and we still have this sell side liquidity resting, and they simply don't know that. But this is literally so simple, and I don't know why is everybody using fair value gaps wrong. So let's actually break it down step by step. So step number 1 is gonna be always mark out highs and lows, so we know where is the direction. So this is the previous daily high, and this is the previous daily low. But guys, I'm repeating, you don't need to mark just previous daily highs and lows. It can be pretty much any meaningful level of liquidity. Then step number 2 is going to be wait for one side to be swept, aka manipulated, and after we see the manipulation, we can search for trade opportunity. And usually if you are looking for the sweep of liquidity, you want to see wicks around like this over here. You don't want to see displacement candle breaking towards the upside. You want to see something like this, because this is showing you that market is dying literally. And you also want to look for fair value gaps in the last move. And then the third step, final step, is going to be confirmation entry on the lower time frame. Like I told you, we are not gonna hope that fair value gaps are gonna hold. We are not gonna blindly place our trades based on the fair value gaps. We are always gonna wait for the inversion or disrespect of the last fair value gap in the price movement, which means in this example over here, if you just waited for the disrespect and then if you took your trade, you will be on the winning side of the market. So right now you know the steps, you saw how easy it is, but let's actually put it on test and see how it works in the live markets. Alrighty, so we are on the first live example, and guys, let me just tell you something. So you really don't need to look for the structure, because other traders are gonna see this as a bullish structure. They're gonna look for daily bars, million time frames, but what are we gonna do? Actually, we are just gonna literally mark highs and lows in the market like I told you. And if you remember, we are gonna trade only after 9:30 a.m. Eastern time. So it's right now 6 a.m. We are gonna just keep the price and we are gonna wait for manipulation. And here we go, market swept this liquidity, which means we can look for reaction. And I'm gonna scale literally to the lower time frame. Okay, this was a little bit too far. And right now, after I scale to the 50-minute, you can see that there is not a single fair value gap created, which means we are gonna scale even lower. So right now it's 9:25 as you can see, so we are waiting for that 9:30 manipulation that I told you back from the presentation, and we have another sweep of liquidity over here, but as you can see there is not any fair value gaps in the move, which means we need to scale down even lower. So let's say on the 3-minute we have one fair value gap, so we are gonna mark that fair value gap. On the 2 minutes, I think, yeah, on the 2 minutes we are aligned with the 3 minutes, and also on the 1 minute we have the same fair value gap, which means all the fair value gaps are aligned and all the time frames are aligned. Now we are just waiting for the 9:30 to manipulate, and as you can see 9:30 week over here manipulation, and we are just waiting for the inversion of the fair value gap. Boom, here we go. This is crazy good momentum to the upside. Market is literally screaming that we are bullish, and you're gonna place your stop loss always underneath the last candle. So let's say here or somewhere around here, but in this example I think it's completely fine to put it here. It's like 60 points, and we can target all this liquidity, literally all this liquidity that is resting here, because there is many traders who place their stop losses above this recent high, above this recent high, or above this recent high. So you got the point. So we are gonna just literally hunt all of them and trying to target 1 to 2 risk to reward. So if I play the price right now, you can see how it played out immediately towards the take profit, because we are aligned with the liquidity and we are entering the market after the manipulation. And guys, also one thing that you need to keep in mind, all the traders who waited, let's say, for this bullish fair value gap to get retested for movement something like this, they missed their trade because they are not aligned with displacement and momentum in the market, and that's literally it. So you can see that you don't need daily bars or any other indicators, so pretty much you only need to be aligned with liquidity and manipulations, and that's literally it. You need to be patient, wait for the inversion gaps after liquidity is taken, and that's it. And guys, this was also bullish example, but right now I'm gonna show you one more example, because this all happened inside of one session. So I told you that we are gonna target the opposite liquidity, but sometimes towards that liquidity we are gonna have bullish or bearish fair value gaps stopping the price towards that liquidity. In this case scenario over here, after market retraced back to the 50% of the range, rebalanced, it hit this fair value gap and also swept all this liquidity, as you can see over here, and we never displaced through this fair value gap, which means market is showing us that we are not that bullish and that we can actually look for some sort of reaction shorts. So right now I'm gonna scale also to the lower time frame and search for the fair value gaps like I did in this example over here. And on the 3 minute we don't have anything. On the 5 minute we have this fair value gap that was inversed. I'm just gonna take a look on the 1 minute, because yeah, on the 1 minute there is one tiny fair value gap, so I'm gonna wait for all of them to be inversed. And here we go, you can enter after this candle like this, stop loss above, and you can target, I don't know, 1 to 2 risk to reward, reduce your stop loss to here because that's after the inversion. You can target this, and if I play the price, you can see how it played out. Very simple. So this was total of 4 risk to reward in just one trading session, which is extremely good. Not every single day is gonna be like this, but sometimes when you see opportunity like this, you need to take it. And I don't need to aim for the whole range over here for 5 risk to reward, because I'm not that much confident into the whole range that is gonna be swept. I'm just confident in like little 1 to 2, 1 to 1, and then after I see another manipulation, another inversion, I'm gonna take and target something small and secure my profits for the day. Base hits compound over time. So that's gonna be pretty much it. Now you can see how simple and repeatable this process actually is. It's very mechanical. One more time I'm gonna tell you, you are waiting for the sweep of liquidity, manipulations, and after 9:30 you are entering the market off of the inversions with a good displacement, of course. And that's literally all you need to know. So I really hope that you enjoyed this video, because this is the best strategy in the whole entire YouTube trading scene. And if you liked it, smash that subscribe, and also you can join my free trading community, free Discord down there, link below. And that's gonna be it. I'm gonna see you in the next one. Peace.